So, yo, what is up for everyone on the YouTube replay? I hope you're having a great day. It's been a while since I've streamed, so let me give you a stock portfolio update. The past couple of days have been real rough, but today we're having a nice little rebound. I'll show you the watch list down here. You know, the Qs are up 1.78%. That's a pretty good day. A lot of that's really led by like crypto kind of stuff, like Robinhood, super green on the day. Palantir's up 4. But yeah, let me show you my portfolio. This is known as my dividend only account. We're up on the day. We're up 0.3%, but we were down on the week, but we are green year to date. We're up 1.97% year to date. And here's all the stocks that I own. And here's my total percent change in every stock. So luckily we are green on every stock. Some of my better performing ones have been like the AI names, like a Google, a Constellation Energy, which is a nuclear play. They own literally 33% of all the US's nuclear reactors. Pure US, or the purest nuclear play that exists out there. There is no close second. So that's my favorite nuclear kind of energy way to get exposure to AI. Google's been great with Google Gemini. And then I have a Roth IRA as well. If you have any questions about certain stocks, let me know. I'll cover them for you. And yeah, I want to do a portfolio update. Yeah, I see some stocks. We'll get into y'all stocks too. What's up, Plasma, Vicky? Good to see everyone. Hope y'all having a great day. So yeah, here's my Roth IRA. We're up 1.53%, but we're still down year to date, 3% in my Roth IRA. Wow, look at that. Every stock is kind of green on the day. So that's great news. Actually, my newest purchase, I just made a YouTube video about it, but I haven't officially talked about it on a TikTok. I bought RMD for the first time ever. I'll get into that stock a little later. I love their dividends, their buybacks. They're actually a beneficiary of the GLP-1 weight loss trend. They're a sleep apnea play. They sell CPAP machines. They have this nice recurring subscription software model that I love, and the CPAP machines as well. So anyway, I'm actually surprised. So that's my Robinhood portfolio. I got a lot of portfolio, so get prepared here. It might take a minute. But yeah, here's my Weeble portfolio. I love being fully transparent. Here's my all-time performance. So all-time, we're only up 9%, so not exactly outperformed the S&P. We've definitely underperformed for the amount of time I've had this portfolio, but we're up at 1.57% on the day. And here's what's up the most. AMD's up 5. And what I'm most surprised about is AppLovin. We bought this stock literally days ago. Just a couple days ago on the 23rd, and the 24th, we bought AppLovin. Yeah, there's my little buy order down there, and we're already up 20%. A lot of that gain is today, but I'm just so shocked that AppLovin's already up 22%. Futu's having a nice recovery, and then Robinhood. So there's a lot of bullishness around crypto right now, and Robinhood's just following that success because they're kind of like a pseudo kind of crypto proxy. Yeah, I got Dave, UiPath. Yeah, this software name has been one of my worst performers. Yeah, someone said Path as well. Yeah, check this out. Yeah, UiPath, we're down 46% on. This is the stock I've owned the longest. I can tell you every mistake they've ever made. We look at the very bottom right. We've had this portfolio since 2021. This was like the first stock I ever bought in here. First stock I think I ever bought ever. I bought UiPath in 2021. Well, it's 2026 now, and I'm down 50%. So it hasn't been too great of a performer, unfortunately. But yeah, we have some other good names in here like Reddit, some other popular Sprouts Farmers Market's kind of been recovering. I think they were up like 5% yesterday. Yeah, they had a pretty decent recovery, still way off their all-time highs. But let me get to my final portfolio here. Then I'll get to some of y'all stocks. What's up, y'all? Why don't you buy Zeta? Hey, I really like that stock. You know, I just kind of have a lot of holdings right now. And software names that, like, I bought AppLovin basically instead of Zeta. I was looking for a great stock to buy, and I chose AppLovin, but that doesn't mean I still wouldn't own Zeta. It's actually a really interesting one. I love their acquisition. I think they bought a company called Marigold for like $300 million. This is a great advertising company that works with like half the S&P 500. So actually, I want to talk about Zeta too. But yeah, this is my last portfolio. It's called my buy and never sell portfolio. It's kind of an experiment where once I buy a stock in here, I'm never allowed to sell it or trim it. So you can come back to my stream in a couple years or something. We'll have all these same holdings in here. And the reason we've done so well is because, well, we've never sold any shares before today. Like, we're up 500% on this stock. Most people, when they're up like 100% or 200%, would maybe trim a couple of shares, but not me, or not with this strategy. So we're going to see how it pans out. You know, Amazon's having a nice little recovery. This is one I've been loading the boat on. I've been telling people Amazon is a phenomenal buy, and they're still pretty cheap even at current prices. Even after they're up on the day, they're still only at a 27 forward PE. That's why if I was a shareholder of Amazon, I wouldn't sell anything or trim on this rally. It's going up another. This is a never sell kind of stock. You know, everyone loves Amazon. And then I got Amphenol, Murphy USA, some of these other names. So yeah, that's my portfolio. Let me know if you have any questions. And I love being fully transparent with my portfolio. And let's get into some of y'all stocks. So I saw someone saying this is actually a pretty interesting ETF. It's an HVAC ETF, ticker symbol HVAC. It's a HVAC and industrial ETF. And these industries have kind of been booming. There's a whole the demand for HVAC, like specialty HVAC, which is heating, ventilation, air conditioning for these data centers specifically, are crazy. So if you look at stocks like Comfort Systems, Vertiv, Amphenol, they're all to the moon. BWX, these are all some pretty good names. Oh, Train Technologies, that's a great one. So if you like, I don't know which HVAC name to buy, you could buy potentially the HVAC ticker symbol ETF. And it kind of diversifies you into the entire industry, which is kind of cool. So someone said Chewy. I think this is like a pet delivery service. Actually, their model is like, hey, we'll deliver your pet food to you cheaper than it would cost in a store, and it just appears to your door. Everyone hates grabbing that huge bag of food. So anyway, this stock has not done too well, though. They're lower than their IPO price in 2019, but I think they're finally profitable. That's the good news. Wow, well, check out the expectations. They're up and to the right. Revenue's supposed to go straight up. Let's see net income. Yeah, on average, they're making 50 million plus of real after-tax net income a quarter. So they're making 200 mil a year. If we kind of zoom out here, so yeah, they've really so they used to lose a lot of money back here, but now they've really gotten their profits locked in, and they're making, and analysts are expecting them to make over 50 mil in net income a quarter from now on. So what's the forward multiple here? Let's see. So a 33 forward PE, it's not exactly cheap, but again, they're really just now getting net income positive consistently, and it's kind of a low margin play. I guess we do expect their margin to go up, but pet food delivery, it's a slow, probably single digit commodity margin. I don't know if Amazon would be a competitor or something, but nothing's blowing me away here. The business model, I don't know. It's just nothing it's nothing too sexy right now. Everyone wants AI and stuff, but I love the boring business companies, but that one I don't know about. I got Amazon and McDonald's. McDonald's, that's like a super boring blue chip. I love that one. Hey, actually, we have a big dividend coming in from McDonald's. That's why I love these. And I forgot to say, Koi. I forgot to say, dude, Koi, are you still in here for the 2 Lucky Lenses dinos, dude? Whatever that gift is, I really appreciate you, my brother. And tacos with the 3 goats. I hope you're having a great day. Thank tacos. I really appreciate you, man. Thanks for those gifts there. Okay, someone said mRNA. Sorry again, there's a lot of stocks. People are asking if I missed some of the stocks. I do apologize. I'm going to be live for another 2 hours. So if I missed your stock, don't worry. I'll probably eventually get to it. But try not to spam though. But yeah, someone said Moderna. They're actually doing great. A lot of the a lot of software names are struggling right now, but a lot of these healthcare defensive names are doing pretty decent. Let's see if there's any news. EU regulator recommends approval of Moderna's COVID flu combination, a combo of COVID and flu shot. Okay. Moderna settles global patent dispute for 950 million. Okay. So, so this is mainly what they sell is, I don't want to say that name again, but those vaccines. And obviously COVID was when they were printing money. So if that ever comes back, they could potentially be making this sort of money again. But look at the revenue now. Look at these year-over-year declines. This is the scary part. The revenue's down 20. Look at these year-over-year declines. The red at the bottom. It's down 30% this quarter, 45% last quarter, 41, 35, and that's after it fell. So look, revenue's down 30, after it fell 65, after it fell 29, and that's after it fell 45. I mean, well, obviously it's comparing from them, and also, so look, here's the revenue that's down. And what about the profits? This is the other bad news. They're losing a couple hundred mil, well, actually close to sometimes $1 billion a quarter. So I think there's other healthcare names that I'm more interested in. If I'm going to buy a healthcare name, especially after it's done this, it's gone from 20 to 50, it's doubled in the past couple months. I would rather pick one that's already profitable, maybe one that's not so vaccine related. I personally own HCA Healthcare. They're a hospital group, largest non-government hospital group in the world. I was just doing more research on them. They actually own 15 college campuses, and they literally, when the people graduate, they work for. They have the best employee ecosystem, best margins. They buy back 10% of the stock a year. And I'm not making that up. They really do buy back 10% of the stock a year. Oh shoot! Let me get my lemonade. Ooh, Credo. Yeah, I saw 2 people talk about Credo. You know what? Let's talk about that one. CRDO. So This is actually one of my favorite growth names to potentially put on your watch list. Hey, what up, Jace? We'll look at yeah, well, I want to get to NU and SoFi. Yeah, I want to get to all these. So here's Credo. This is a great growth name. You maybe or maybe not have ever heard of before. I love this one. Some of the most impressive growth I've ever seen, and I'll just show you the numbers for yourself so you can draw your own conclusions. So this is what we're working with. This is their revenue, basic sales, the year over year, and this is in US dollars. It's up 200% year over year. After grew 150, like triple digit growth for the past 5 quarters in a row. And not just the revenue that's at a record, 400 million revenue. On this 400 million in revenue, they netted an after-tax net income $157 million. And look at the other quarters before. Like it's identical. Like the margins are actually growing. Their net margin went from a 21 to a 38. That's margin expansion. So they're keeping 38. If you go spend $100 on one of their products, they keep $38 after tax. And another huge cherry on top, that's a huge safety net, takes a lot of risk off the table, is they have no debt. Look at this fortress balance sheet. So they don't owe anyone any money. They have $1.3 billion in cash. So whenever they make a bunch of net income and free cash flow, they don't have debt to pay. They don't owe anyone any money. So they just retain all this cash. So they have $1.3 billion in cash, and that cash just isn't there sitting doing nothing. It's a lot of that is earning interest. So let's go see how much just interest on their cash they're making. They are making wow, they made 9.5 million of just interest on their cash this quarter. And look at their free cash flow, that just goes to their cash pile, 140 million though. So anyway, this just has great growth and it's beating on expectations. The analysts are expecting the growth to continue. Net income is going to go from 63 to 158. And notice every quarter they beat by like 20, 30, 40%. Revenue too. Revenue's going to 450 and they're going to net 158, but they beat. So EPS is great. So they're a really cool company. Let's see what the valuation is. Forward PE, wow. Oh, sorry, my phone's a little slow right now. But if you look on the right, the forward PE, it's a 29. So that's like surprisingly cheap. And honestly, it's worth nibbling at current prices. Like I wouldn't go crazy buying the stock, but I potentially like put it on the watch list, like or do the slightest buy at a 29 forward PE. But there is one more thing I do want to mention about this company is that they are headquartered in the Cayman Islands. And what does that mean? That means they pay no taxes. So one of the reasons their margins are so high is the fact that their tax rate is less than 1%. So they pay less than 1% total tax because of where they're headquartered. So anyway, great company in terms of judging them purely off the fundamentals. That was great. Okay. Any good buys for today? I don't know. The good buys were yesterday and the day before. Oh yeah, I did want to get to SoFi. Actually, if you go look at my most recent TikTok, I just did like 3 stocks to buy now. The first one I looked at was SoFi because they're an impressive company with great growth. And full disclosure, I do own SoFi, so I might be biased, but I own them for a reason, and that's because they're impressive and I love the growth of the fundamentals. I'm not just buying the stock because they're on a dip. I'm buying them because the fundamentals are so good. And the metric you look at for SoFi is their financial services. They do a lot of loans and lending, which is doing great too, but this is the real growth driver, their financial services. Look at the annual growth rates. They created this in 2020 that for the full year, they did 11 million in revenue for that full year. Now they did 1.5 billion for full year 2025. And if you look at this on a quarterly basis, it looks even cleaner. These year-over-year growth rates in the middle, it's only green. It's up 78%, after grew 85, after grew 114. This is just really impressive growth. And that's why I think this company deserves my attention and deserves a high multiple because they're so growthy. And growing at this growth rate, like what are the numbers going to be the same time next year? And they've been beating on the analyst expectations. We can see those as well. Oh yeah, we'll look at NU as well and Netflix. Yeah, I'm seeing some good stocks here as well. But yeah, we can see the analyst expectations. The orange lines, what the analysts expect every quarter. Notice the past 3 quarters in a row, they beat on revenue and they beat on net income. And the net income is projected to only go higher. It's supposed to be 200 million in 2 quarters. So that's why I think people are really taking SoFi serious. If we zoom out, that's what you want to see for a growth stock. The revenue just hits a new record every quarter. And if we look at the net income, they're the most profitable they've ever been. Actually, they had a one-time adjustment. They didn't actually make 300 mil, but they did make like 100 mil that quarter. But so basically, this was the most profitable quarter they've ever had when you exclude that adjustment because it says negative 50%. Not actually, but anyway, SoFi's a beast. Again, you can see just from the analyst expectations, that crazy beat expectations on every metric. So I am a SoFi shareholder, so I might be biased, but I own them because I really like them. Hey, what's up, New York and Rolando? Good to see y'all. Let's see. Good day tuning in from South America. Can internationals get a piece of this pie? What are you talking about? Oh yeah, hey, what's up? Good to see you, man. What should we look at? Oh yeah, NU. So this is another crypto related stock. This is actually a crypto bank out of Brazil. That's where all the revenue comes from, or I'll just start off the analysis here. So most or 93% of the revenue comes from Brazil. And that's actually the best part because they're a crypto bank where people use crypto for a transactional purpose. Like here in the US, we don't need that. Where it's really needed are these other countries where the currency sucks. So that's why I actually really like this one. This is the real, and this is in US dollars, USD after tax net income. I don't believe it, but it really is this good. They legit make 500 to 700 million of real after-tax net income a quarter, and it's only growing at this rate. And if we go to the revenue's up 41, and the net income is up 41 as well. So that's just incredible. So they literally have 18% net margin. So their net, I just can't believe how good these net income numbers are. And let's see what the projections are. So yeah, the net income is supposed to be $1 billion in 2 quarters. So the forward PE I think is very cheap, which is surprising. Yeah, an 18 forward PE. That's why this is another one I really like, and they're actually applying for their U.S. banking charter right now. So that could be a, oh, look at this. Speaking of that, look at the second line here. NU receives conditional OCC approval for U.S. national banking charter. Those are hard to get. So, actually, that's kind of cool. Okay. CFO says strategic investments to pressure efficiency ratio for 4 to 6 quarters. Oh, well. I love them, and they have good numbers. They make great net income. What app using? Yeah, this is a brokerage. It's in the link tree in my bio. Very first link there. It's free if you want to get it. So, yeah. It's affiliate link. So if you'd like to deposit $100, we'll both get like a free stock. But yeah, it's actually a broker called Moomoo. Very first link in the link in my bio if you want to get this app I'm on. Okay, Weeble. Let's do Weeble. Thanks again, Omar, for the crazy roses there. I do appreciate you, my friend, and all those gifts. So Weeble, I am a shareholder of this one. They are copying Robinhood's successful business model. And I am a shareholder of Weeble. They're one of my smaller holdings, but for a reason. This stock I wouldn't really want to trust with a big portion of my portfolio. So yeah, even at this all-time low level, like they IPO'd almost a year ago, and they're at an all-time low, basically, they're still expensive, even at this kind of all-time low level. So that's why I'm still keeping my allocation low. It's one of my smaller positions. It's only $550, but I still own them for a reason because I am way more bullish on Weeble than the analysts are. Because I am a Weeble user. Here's my Weeble account, and I've noticed ever since right after they IPO, they added in these features to copy Robinhood's success. And this is going to make them a boatload of money, more than the analyst, I think. They just added in, if you look in the top right, it says new on prediction market and crypto. Weeble just added prediction markets and crypto. Those are 2 huge new streams of revenue for them. And they also added in like this Weeble premium where you have to pay a monthly subscription. I don't pay for it, but they basically copied Robinhood Gold. And I'm also a huge fan of Robinhood. I own Robinhood stock. I own Weeble stock. I own Moomoo stock. I own all the brokerages. I own SoFi. I own Dave. I love the fintech industry. Picks and shovel space. Yeah, I am a shareholder of Robinhood, SoFi. But yeah, Weeble, let me pull up their numbers right here. Like the forward PE, again, they're just now getting net income positive, so it's actually pretty decent. But, the forward PE is a 44. So it's not like dog cheap even at an all-time low. But I just can't believe this is only a $3 billion company. And I'm convinced they're gonna crush these numbers. They're going to be making, let's do some math here. I say they're going to be making 40 mil. So that's 120 mil a year. So 3 divided by 0.12. On my eyes, they're trading at a 25 forward PE. So I've actually been buying them the past couple of days. Again, just with very small amounts of money. I really don't recommend having this stock as a meaningful size position because it is risky and stuff. They have a weird share structure. But yeah, here's kind of like my recent buy orders. I kind of just, whenever I have extra cash or receive a dividend, I just buy like one little share, $6 of share, just one little share at a time. Actually, I have $22 of cash right now. I might actually buy some shares. But yeah, my most recent purchase is RMD CPAP sleep apnea play that benefits from GLP-1. Actually, my most recent YouTube video, is a whole deep dive into them. Okay, let's see here. $550. Yeah, that's 8% of my Roth IRA. Yeah. So but overall, all my portfolio, it's like Weeble's like, yeah, this is a little misleading because it says it's 8.5% of my portfolio. It's actually like less than 1% when you include this portfolio, and this portfolio. I own way too many stocks. I'll just say that. So, after the bell curve of diversification, after you get over 30 stocks, you're really not diversifying that much more after you add like the 30 stocks. So going over 30 stocks is really pointless. But I just like owning so many great names. Like I want to own them all. Dave Sezzle. Yeah, Sezzle and Dave did really good on earnings. They both just reported earnings. So yeah, look at that little gap up. Well, dang, they haven't loaded in their earnings yet. But yeah, Dave, this is one of my holdings, and I don't think their numbers are. Their numbers are loaded here. So here was what they did. They beat on revenue by like $1 million. The net income was a big beat. Expected 47 mil. They did 66. Really just want to look at the EBITDA. So yeah, they beat by 5 million. So it was a great quarter. The forward PE is still cheap. Like that's why this one's still going way higher. The forward PE is a 15.4. And it's the same as their current PE ratio. So the analysts are expecting no EPS growth, but I don't buy it. Like if we look at what they've done the past couple quarters, they've been beating on well, again, they had a little one-time adjustment missing that quarter. So you really just look at the operating profit, but it's not loaded in down here yet. Anyway, I can't give you a full analysis on this one because the numbers haven't loaded in, but I'm really, really happy with their numbers. They maybe could have beat on revenue by a little bit more, but it's okay. 15 forward PE is still cheap. And I'm certainly not trimming or selling any shares. And again, apologies if I'm missing some stocks here. Viper said CEG is up. Glad I bought it. Yeah, this is a great, if you're looking for a utility, all these GPUs and data centers, they say the biggest bottleneck, the NVIDIA CEO just said this, is powering the data centers and having the power. And this company right here is the purest nuclear play. I wouldn't buy any other nuclear stock besides maybe Vistra Energy or Berkshire Hathaway. Like I would stay away from Oklo and all these other small modular reactor junk companies that aren't going to have any revenue until 2030. So SMRs are a pure proof of concept. There is no working SMRs that exist except for 2, and neither of them are in the US. So anyway, this is the best nuclear play. They own literally over 30% of all the US's nuclear reactors, largest pure play for nuclear energy. And they have the best dividend, best share buyback program. Yeah, you get a 0.5% yield plus. They buy back their own shares, and they do M&A. They just acquired a company called Calpine, and it's instantly accretive $2 of yearly EPS. So that's why, what's the forward PE here? Okay, so the forward PE is a 31, but look how much cheaper it is than its trailing 12 months PE. So if you look at this on the left, you're like, it's really expensive at a 43, but on a forward metric, it's only at a 31. It's not crazy expensive. But yeah, that is, I wouldn't buy it at this price, or I wouldn't buy it significantly at this price, but yeah, good stuff buying it on the dip where it was. Yeah, look at them. Just in 1 month, they're up 30%. So, yeah, we're up 56% on Constellation Energy. And again, 30% of that gains just came from this month. Kind of cool. Hey, what up, Egg Mayo? How you doing? Can you look into Beam? Sure, let's do it. Good to see you, man. And what up, Luffy? Might as well buy VTI at that point. Is that, the Vanguard Total Stock Market? I think that is. Hey, Matt, good afternoon, man. Hope you're having a great day, Matt. Can you short on Moomoo? Yeah, you can, Omar. Usually, let's see if this stock is shortable. Actually, it normally says it down here. Anyway, we can see like the short interest on this company. Well, anyway, Beam, we should look at the short interest because look, 20% of all the shares are being shorted. So there's some huge bear thesis on this company right here. So let's go see if we can figure out why. A lot of therapeutic biotech names are kind of like that. So let's go look at their actual numbers because that's what matters. And, so it looks like they got their first ever sort of revenue, or what happened here? Analysts this quarter expected 12 million of revenue, but they did 114. Did they like sell off an asset to do that? It kind of looks like they did because their cash from investing activities was positive. Yeah, that's weird. They did 114 million. Maybe it was real. I don't know. But I don't like the inconsistency. Like last quarter, it was only 9 mil of revenue, 8 million. So I don't know if this was like a one-time adjustment from them selling off an asset, because it says the revenue was 114 mil and they sold 108 million of their own assets. So maybe it was that. What are the analysts expecting? Yeah, look at next quarter. So they're expecting 12 mil of revenue again, and then 12 mil of revenue again. So, and they're look at the expectation of the net income, and they're supposed to lose 100 million for like every quarter from now on. So I can now see why they have a 20% short rate. It's a $2.8 billion company that loses 400 million a year. So you're losing about 15% of the market cap every year just in net income. She actually aligns with the short interest rate. Yeah, that's a reason. Actually, I'd be very careful with that one. I'd look into that recent quarter, see what happened there. But hopefully that was kind of helpful there. I don't want to be too bearish. All right. I never like being bearish on any stock, but I just try to keep it real. So next up is Broadcom. This is a TPU play. They've actually had a lot of strong orders. They have a huge partnership with Google. So let's see here. Broadcom ships industry first 2 nanometer AI chip to Fujitsu, targets 1 million by 2027. Okay. Oh yeah. So check this out. The middle line, JP Morgan expects Broadcom Q1 AI revenue to exceed $9 billion on the Google TPU demand. So Google is making a bunch of TPUs, and they're so good that Meta literally just bought billions of dollars of Google's TPUs. Meta's buying NVIDIA chips, AMD chips, and they're like, let's buy these Google TPUs as well because they're good and they're more effective for the cost. So yeah, they own VMware. Oh, it just said some news on that. UBS identifies VMware customer churn. Okay, well, that's not good if they're in AI coding risks to Broadcom software business. So actually, I love their VMware software business. Check this out right here. A lot of people know them for their semiconductor TPU solutions, but they're custom chips. But a lot of people know about their VMware business, which is huge. And this has been one of their biggest growth drivers. Sorry about a little lag here, but yeah, look at the full year revenue growth. Like in 2023, like the revenue was nothing. It was not nothing, but it was 7.6 billion. But for the full year 2025, it was 27 billion. And look at it on a quarterly basis. It grew 19%, but that's after it grew 195%. And that was after it grew by 5%. So they're just continuing the streak of growth. They're just hitting a new record every year, every quarter. Let's check out the semiconductor solutions as well. So the software business is really growthy, double digits, sometimes triple digits. Let's see look at this one. This one's up 35% year over year. It's actually, the growth rate's growing. It's up 35, after it grew 12, after it grew 4. So the growth rate is literally growing again, a lot from the Google TPU stuff. And let's go look at their margins. Broadcom has incredible margins. So here's the revenue. They did 18 billion of revenue in Q4. So on this 18 billion of revenue, they netted 8.5 billion. If we zoom out, no wonder people really like Broadcom because they're printing money, and not just net income as well, but free cash flow. That's what FCF stands for right here. They're doing, look at the growth. It's up 36% year over year. They're doing over 7 billion of free cash flow every quarter now. 7 billion of free cash flow, like 6 billion in net income, great balance sheet. You get a dividend too. It's like NVIDIA with a bit of a higher yield, a 0.8% dividend yield. So, yeah, pretty interesting here. They're a little expensive still on the right. At the forward PE is a 39. Like if you go to actually NVIDIA is at a 29 forward PE. So NVIDIA is like cheaper than this one, but they're at a 39 forward PE. But they might be more in demand than NVIDIA in the future because of maybe people getting away from paying the 60% NVIDIA tax and going to like Google TPUs or developing their own TPUs. Like Amazon. Amazon's making their own TPU as well. Their titanium chip. Let's see if there's any news about that. Oh my goodness, and it's talking about it. Look at the middle line here. Amazon shifts to in-house AI models with proprietary Trainium, which is the TPU, and infrared chips to cut cost by up to 50%. So what we're kind of seeing is a trend of people maybe getting away from NVIDIA chips. Like Amazon still buys NVIDIA chips, but their Titanium 3 chip offers up to 40-50% cost savings over GPU with doubled compute performance in certain workloads. Amazon plans $200 billion in CapEx. Yeah, that's where their CapEx is going. Oh yeah, and this is a big kind of red flag for MELI stock, which is like the Brazil competitor for Amazon. Amazon launches 15-minute delivery service, Amazon Now in Brazil. So pretty cool. There's just so much news we could go into here. Zero referral fee. Anyway. Let's look at some more stocks here because I kind of spent a while on that one. Okay. Garrick said Microsoft. Yeah, dude, one of the most quality stocks to buy, safest stocks to buy now. You can't go wrong buying Microsoft right now. They own, 28% of OpenAI / ChatGPT. Let's see. Microsoft implements double-digit price increases across enterprise agreements effective November 25th. I just got this notification. So they're literally raising, this is their first literally price increase on their software suite. Like think of Office, Excel, OneDrive, those kind of solutions for businesses. This is their first price increase in literally like 15 years. They haven't done a price increase in forever. So, and they're doing like a big price increase. So that's going to be pretty interesting to see what happens in the future. Oh yeah, OpenAI secured Pentagon, Microsoft back. Anytime OpenAI gets revenue, 27% of the revenue goes to Microsoft. ChatGPT, 26% reduction in hallucination. Microsoft partners with SpaceX. I mean, I just love reading the news. Like I could just read the news all day, but let's go look at the fundamentals. So the forward PE, the valuation is so cheap on the right, only a 23 forward PE. So they're only trading at 23 times next year's net income. I can't believe that. For Microsoft, that is dog cheap. This should be like at very minimum, a 26, 27 forward PE. So that's why I think they're a great buy, even though they're up a little bit off their bottom, like 5%, but they're still a great buy. So here's their main software business. This is the part that's probably going to grow even more. So their software, their enterprise software, like I said, Excel, OneDrive, all that does over 120 billion of annual revenue for them. But another huge part of Microsoft is actually their Azure cloud, their intelligent cloud. Think it's a competitor to AWS and Google Cloud. They're the second biggest market share behind AWS. It's AWS, Azure Cloud, then Google Cloud, then Oracle. But yeah, they have this does over 100 billion of annual revenue for them as well. Pretty insane. And then they sell their PCs, low margin hardware. That's down year over year. You don't really focus on that. But anyway, Microsoft, better credit rating than the U.S. government. They're literally more likely to pay off their debt than the U.S. government is. And they print money, of course. Here's their they had a slight one-time adjustment because they took a gain on OpenAI. They basically sold some shares of OpenAI and had a realized gain on it. So basically, the net income was slightly lower than this, but they really did make like 30 billion, slightly over 30 billion of net income this quarter. Ridiculous. I can't believe it. And they're investing a lot into the future. They're spending, 30 to 40 billion. They projected, I think, 150 billion this year in CapEx spend. So their cash investing activity is going to be crazy. So they're basically spending like slightly more than, well, yeah, for the next couple quarters, they're going to be spending slightly more than they're making, but I'm okay with Microsoft doing that. They have a dividend to a great dividend and near 1% yield at this price. Like, if you buy now, like your yield on cost in a couple of years is going to be insane. I literally think, not financial advice, if you buy Microsoft right now, you should just get like 7% of your money back for the rest, or 7% plus at minimum of your money back for the rest of the time, potentially. Oh yeah, so there's this depreciation thing. Whenever you buy a bunch of chips, and one of the reasons people are buying a bunch of chips right now, because the administration did like this instant like depreciation write-off thing you can do, if anyone's heard of that. But yeah, basically they can add the depreciation offsets. It makes their net income look higher than it actually is, but it doesn't matter. So then it's a good time for SoFi? I think so, but very small, not crazy into SoFi. Okay. Hey, what's up, Plasma? He says, AMSC. Let's do, and Charlie, actually, GRRR. Let's do this one real quick, and then we'll get to, what's up, Edmund? We'll get that ETF and some of these other names. So here's Gorilla Technologies. I don't really like this one. It's just a very small name if I were to own this one, it would be a super, super small position. But if you look in the top right, the whole company's only worth 260 million. So that's a very small market cap. And but look at this. This is the good news. Like why they're actually really interesting. Let's hope they don't miss like they did and have been for the past 3 quarters. But analysts are expecting 22 million of net income in 2 quarters. 22 million net income on a $260 million company, that's nearly like 10% of the market cap they're making just in net income. So if they can hit those metrics, I don't know if they will. So that's why it says the forward PE is a 2. So according to analysts, they're trading at 2.5 times next year's net income. But notice like they've missed on, like they expected this quarter, they expected them to make 5 million, but they actually lost 2.75. So it's kind of like, do we want to trust the analysts on this one? So if I own this one, I keep it as a very small position. I heard some people talking about like they bought a Southeast Asia data center, something like that. I don't know, or an acquisition. I wish I could give you more thoughts on them, but I'd just be very careful. Because just the market cap is just so tiny. But those future projections, if true, that could be a really good stock if they hit those numbers. So someone said the FINRA ETF. So this is the Fidelity Enhanced International ETF. So if you're only own US stocks, you want to get some international exposure, this could potentially be one to own. So it owns ASML as its largest holding. I love that. I love Novo Nordisk. Or why did I just say Novo Nordisk? ASML. They have Siemens. This is an electrical infrastructure play. We have some of their boxes on our house. Oh, another Siemens. So they got like 3% of this is Siemens. Actually, their largest holding when you include the preferred shares, Siemens is the largest holding. That's great. And some of these other names I've ever heard. Yeah, Rolls-Royce is great. Rolls-Royce is an actual aerospace and defense play. Nestle's good. Toyota Motor. So cool little international ETF. Yeah. So let's do, what was it? AMSC real quickly, and then we'll look at some of these other ones. Hey, we just looked at Dave a minute ago, Koos, but we might get back to that one. AXTI. Yo, KP, my bad. If you're still in here, we'll do AXTI next. Sorry if I'm missing some of these names. There's a lot of stocks. So here's American Superconductor. If you look in the top right, another small one, they're only worth 1.5 billion, but that's actually what I kind of like about them. The fact that they're only worth 1.5 billion. So out of all the companies that are worth 1.5 billion, I want to buy the company. They had a total one-time adjustment this quarter. Says they made 117 million. They didn't actually, but they did make 3.3 million, which was up 155% from the previous year. So basically, if we zoom out, like they're the most profitable they've ever been. Like they used to lose a lot of money back here. It was a tough buy, but now the company is literally making millions every quarter. And another big cherry on top is the fact that they have no net debt at all. So they're actually making interest on their cash, which is pretty cool. Are they wow. So maybe they had a one-time adjustment because they just bought a company, a big acquisition. They bought a company for 75 million. That's pretty significant when you're only worth 1.5 billion. So that's pretty interesting. Look into that. Let's see what the projections are. So the revenue is going to go to 85 mil. Net income is supposed to go to 6 mil. Again, that was a really good EBIT right here. And they've been beating on EBIT the past couple quarters. So I haven't done actual research on what the company does. Maybe they make electrical control systems, generators, drivetrains, power converters, interconnectivity solutions, software, turbine designs. It's a niche kind of AI beneficiary play there. Let's do Elf. So Elf Beauty, and then we'll do AXTI. Oh, bet, KP. So here's Elf Beauty. This is a beauty and cosmetics company. So they sell a lot of beauty products. They have nice top line growth, and the forward PE is pretty fair. On the left, it looks expensive at 45 PE, but if you look at next year's numbers, the forward PE, they're only at a 27 forward PE. So let's see what those projections. Yeah, they're supposed to make 56 mil. But yeah, if we zoom out on the revenue, it's actually been pretty impressive on how they're growing their top line. Like especially from 2020, like the revenue used to be like 80 million a quarter. Now it's 350 million a quarter. Like I think they're taking some market share away from like Ulta Beauty. I don't know. And they just did an acquisition too last quarter. It's another reason they're growing really fast. They bought last quarter, I forget the name, but they bought a company for $600 million. So, that also was another reason why the revenue grew 37% this quarter. It was because of that acquisition. So pretty cool. And yeah, they really do, or they're only at a 27 forward PE. So it's not super cheap, but it's probably reasonably priced at current levels. I know Ulta Beauty has been the real winner. They've done phenomenal. Yeah, look at Ulta Beauty. That's because of the buybacks. Dude, they buy back so much of their own stock a year. They do a dividend. So Ulta Beauty is kind of cool. So let's do what was this one? AXTI. Axt Inc. Okay, so wow, this stock has done phenomenal. Yo, congrats if you own this one before today. They went from like literally 6 months ago, it was $3. Now it's $38. So you must be a happy shareholder. So they do substrates, which grew 41% over year in raw minerals. Okay, so it might be like a rare earth mineral play. When we combine both businesses, the revenue declined 8% year over year. But and they are losing a bit of money. I mean, actually not that much. They're only losing like a few million a quarter. So it's not that bad that they're losing net income. Good balance sheet. I wonder why the stock has had so much positive momentum. I mean, there's no forward PE. Reinvest TeraWulf proceeds into AXT shares. Maybe they're like a component for it's a raw material for semiconductors. Maybe we can check out their website really quickly just to maybe. Oh, here's their investor relations tab. So telecom infrastructure. Automotive. Okay, well, specialty materials, substrates, and raw materials. All right. So semiconductor equipment is the industry. Interesting. Yeah, they've done phenomenal. I don't know if I'd buy them today. I wouldn't probably buy them today, but yeah. Okay. You still holding Powell? AXTI has a monopoly on indium substrates. Really? Huh. Thanks, Green. And yeah, I do still own Powell Industries. Yes, sir. I'm up. I've never sold a single share of them because they're in my buy and never sell portfolio. So yeah. Hey, what up, Sam? Good to see you, homie. So let's check out the next one here. What's up? I've been hearing about App for a while. You said it, so I decided to bite the bullet. Yo, well, if you bit the bullet on AppLovin, you must be doing great. So we literally bought this stock days ago. This is like our newest position. There's my little buy order. I'm like, AppLovin is such a good deal. So I bought 1.5 shares. I'm always a fan of fractional shares. You know, who cares psychologically if you have zero point 0.5 of a share? I don't care. It's always about the money invested in the stock. So yeah, we're already up, and it's literally just been a week, 25%. It's like 3 years of S&P 500 returns, and it's up 8% on the day. So yeah, we kind of knew that a lot of these software names got really oversold and just overpunished, and AppLovin was just the one I chose to buy the dip on. I made a few videos about them. But yeah, I have only good stuff to say about them. And I actually just made a video about AppLovin. It's my most recent like short slash TikTok, I think. Juan said Nike. Ooh, did you ever buy Micron? Actually, and I saw someone say Micron earlier. Let me cover Micron really quickly because this is a popular one. So this is a memory shortage play, you know, because of the memory shortage, you know, they're booked out into like 2027 with orders, crazy backlog, you know, NVIDIA said they're raising prices on their GPUs because of the memory shortage. It's tanking PS5 sale margins and Nintendo Switch margin sales because the memory cost is so high. So check this out right here, Micron. And here's the thing. Micron I think will potentially go higher. If I was a shareholder of Micron, I would not be selling or trimming my shares simply because of this forward PE metric here on the right. You know, on the left, they're expensive at a 38, but it's really the forward metric you look at. And they're only at a 9 forward PE. And that's using these expectations right here. So this quarter was already a blowout, insane beat. They expected 4.3. They did basically 5.3. But next quarter's the insane part. They're expecting 9.6 billion. And then 12 billion the quarter after, which if you annualize that number, you know, that's over $45 billion of after-tax net income a year. That's where they get the 9.4 forward PE from. But, you know, here's the thing, you know, this next year is supposed to be like peak prices. Like they potentially will, like next year, they're going to be making 11 billion a quarter. 2 years from now, that is not expected, but so that's the dilemma. I don't know. But the memory shortage could just get worse. So it's kind of just like sentiment around the memory shortage. NVIDIA CEO confirms NVIDIA is Micron's largest customer. Wow. So check that out. The largest customer of Micron is literally NVIDIA. So Micron ships samples of RAM. So anyway, Micron, that forward PE implies to me I probably wouldn't be selling, you know, at least for the next year. My 17 shares of Micron are treating me well. Good stuff there, Free Me. Good to see you, man. Hey, what up, Nick? You said Palo Alto Networks. I think that's a Nancy Pelosi stock. Actually, I don't know if it's in her top 10 holdings anymore. It used to be. Dang, Dish, you got Disney again? Okay. Let's check out Palo Alto Networks. So this is a cybersecurity play. Yeah, of course, they've been really struggling because of the whole software dip. But I think Palo Alto Networks should be more resilient to this software sell-off than like a Salesforce or an Adobe, because this is a cybersecurity name. And I'm a super believer that cybersecurity demand is only up and to the right from here, because there's a lot of warfears and people will utilize AI and just get better at hacking and stuff. So cybersecurity is in such demand. They have over half of the S&P 500 as customers of them. They're still expensive on the right at a 77 forward PE. So that's the only bad news, that like because of that forward PE, they could potentially like still fall even more, like, and still be a little expensive. But this is one that's on my watch list. I'd love to own them. It's a subscription model company. They still deserve a lot of hype because this needs to be rewarded. This subscription revenue growth is so impressive. It's up 14% year over year. You know, after grew 20, after grew 25, after grew 32. It just hits a new record every year, every quarter. We can check the annual numbers. Like That's what you want to see. And they also have their support revenue, which is also up double digits every quarter. And the net income projections are great. And I believe they're doing an acquisition. Like they're about to buy a company called CyberArk for like 10 billion. But yeah, look at their bottom line. They had a one-time adjustment that quarter, but they really are making like 400 million of after-tax net income a quarter. So, and the free cash flow is even better. They're doing over $1 billion of free cash flow a quarter. So yeah, Palo Alto Networks is my favorite cybersecurity. Well, top three, probably my second favorite cybersecurity stock. Maybe CrowdStrike would be my first favorite, but it's a good one. It's a great one. Samsung delayed one of their new fabs. So production will get any better. Yeah. Dang. So the supply just won't meet the demand. APLD was like $7. Hey, what's up, Logan? Good to see you, man. AMD, please. I bought at 67 last year of Micron. Yo, dang. You must have a great yield on cost too. So AMD, yeah, this is a a competitor to Nvidia. Let's actually see if there's any news. The Nvidia or the CEO of AMD just came out and said their CPU sales like dramatically passed my expectations. She said, they had a big partnership with Meta. So AMD and Meta announced strategic partnership for a 6 gigawatt GPU deployment valued over $100 billion with performance-based equity warrants. I mean, it's just crazy. So Meta is literally buying so many of their own shares of their GPUs. Is there anything else? Yeah. Meta Platforms terminates advanced AI training chip projects, expands partnership with AMD. So anyway, what I've loved about AMD is how let me actually start with NVIDIA. So if we go over here to NVIDIA in the top right, NVIDIA is literally worth $4.47 trillion. So if you buy one share of NVIDIA today, for you to double your money, they have to be worth $9 trillion. I just think from the law of large numbers point of view, it's a tough double. So that's why I bought AMD instead, because the market cap's only $300 billion, or when I bought it, it was like $150 billion. So I just thought it was like an easier double, and their sales they're growing just as nice and beating on expectations. So the orange lines, what the analysts expect every quarter, notice past 3 quarters in a row, big beat this quarter, and on net income for the past 3 quarters in a row, beats on net income every quarter. We can zoom out. Look at the free cash flow. That's what FCF stands for, free cash flow. Just a record. Like $2.3 billion this quarter. Net income was $1.5 billion, up 200% year over year. So, and no net debt too. That's a really good looking balance sheet. So, that's why I do on AMD. I'm totally biased. So I do have 10 shares of them. I did trim a little share at 259 when it was way up there. I might even buy one more share, but I'm happy with my position right now. And yeah, they're nice. They're up 5%. Is anything down? Some of the defense names like Progressive, Sprouts Farmers, Disney's down on the day. Oh, well. All right. Let's see what's next. Surfair Mobility. What is that stock? Yeah, if you have a stock you want to look at, give me the ticker symbol. I'm not sure what that is. 6-7 stock. I don't know what that one is, Evie. SoFi. So let's do SoFi. All right. So what's up, Danny M? Let's do SoFi. So I am a shareholder of SoFi, another one I own, so I might be biased. So full disclosure, I may be biased, but check this out. The metric I love to look at on SoFi is their financial services. And on an annual basis, it just looks so good. For the full year 2025, it was $1.4 billion. But look at it on a quarterly basis. It's up 78% year over year. After grew 85, after grew 114, after grew 287. Like, these are very impressive growth rates, and analysts did not expect it to grow like this. Like, if you asked me a year ago, would they continue this sort of 100%, 80% growth rate? I wouldn't say so, but they do. They're beating expectations. We can see those. That's the orange line for the past 3 quarters. Oh, that's the net income. Here's the revenue for the past 3 quarters in a row. They beat on revenue every quarter, and the expectations are up and to the right. And same with net income. They beat on net income every quarter, and it's expected to be higher at $200 million. So that's what I love about SoFi, and that's why I own them. They're a nice growth name, and they're actually a pretty decent price to start a nibble on them. Like, I wouldn't go crazy at current prices, but this is where you start like the smallest of nibble. Because at a 28 forward PE, that starts to get like, how much cheaper can it really get? It can't get much cheaper than a 28 forward PE for the growth that they have. So, that's why I think like the bottom is close on SoFi. If not, it already bottomed out. So, risk reward's pretty good on that one, but as a very small position, wouldn't go crazy yet. Alvi said, trust me, OpFi. Okay, let's check out OpFi. I saw Palantir. Ooh, Palantir and SEHD. Let's check those out too. So here's OpFi. Is this like a crypto stock or I don't remember? Credit services, community banks to the everyday American. So it's a community bank, credit services. So the forward PE, it says it's a 1. So they're trading at 2 times next year's net income. What's the market cap then? So this whole company, that's weird. Well, wait. Okay. So the whole company's worth $795 million, and they're expected to make 30 mil, 37 million. So they really are at 2 times next year's net income. So that's odd. And the revenue growth is good. Check that out. The revenue's up 13% year over year. And they've netted 70 million on that. So they have around like a 10 to 20% net margin if you kind of average it out. I mean, I don't see anything wrong with this company. I just got to study it more. Like, I wonder why. Are they really that cheap of a valuation? I mean, they're, again, a very small company. They're only worth 700 million. But that's a cheap forward PE if true. So let's do Palantir. PLTR. This is another great growth name, just like SoFi, but this one is a lot more expensive than SoFi. And hey, Northern Jays and OLP Pop, I forgot to say this if you're still in here. Thanks again for that golden boxing glove and the roses there, Northern Jays. I appreciate y'all. So here's Palantir. Wow, they're up 4% on the day. They've actually been going up ever since the war news, like the strikes and stuff. I don't want to say more of it on TikTok because I'll get in trouble, but y'all know what I'm talking about, the recent like war news and stuff. Palantir is actually it went up on that because they have huge government military defense contracts. Yeah, look, Palantir benefits from the U.S.-Iran military conflict as defense AI demand increases. U.S. government revenue grows 66% year over year. Palantir added to Pentagon's $150 billion shield vendor list for Golden Dome. GE Aerospace partners with Palantir to join Defense Logistics Agency contract for J-85 engine supply chain. But check this out. Literally 54% of all the revenue comes from the government. And check out the government revenue growth. It's so good. Like, it's up 60%, after grew 40, after grew 10. So like the growth rate's growing. It's insane. So not just the government revenue growth, but also the commercial side from other S&P 500 companies like a GE Aerospace. That's up even more, 82%. That's so impressive, and that's why they deserve a stupid high valuation. Unfortunately, this valuation is still way too expensive for me to pay, but again, Palantir deserves this high multiple at 125 forward PE because they're so quality, and we can see the analyst expectations are up and to the right, and every quarter they beat like crazy on net income. Like, they expected 460, they did 608, and if we go to the balance sheet, another huge, like, takes a lot of risk off the table is Palantir is just debt-free. No debt at all. They don't owe anyone any money. 7.2 bill of cash. So, yeah. All right, thanks. Yeah, hey, if y'all want to hit the follow button, I stream every day. I sell nothing. I have no course, book, WhatsApp. Just want to give my opinion. So, yeah, watch out for people impersonating me. I'll never follow you or DM you. Just want to give my opinion. SEHD, this is a dividend ETF right here. And a lot of these boring dividend names, like a Johnson & Johnson, an ExxonMobil, a Chevron, Moderna, random stocks like that have been doing great. And yeah, like a Lockheed Martin. So yeah, Lockheed Martin, Chevron, Verizon, Altria, Coca-Cola, Pepsi, these kind of higher yielding, boring stocks have been doing really good in this environment. Like, as all the software names are selling, the dividend stocks have been doing great, like at McDonald's too. So yeah, this one you kind of buy for a higher yield. Look at this. You get a 3.3% dividend. So no matter what the ETF does, you're still getting 3.3% of your money back just in a dividend every year. So pretty cool. And historically, you should get like the 3% dividend and then probably like 3% stock price appreciation for like a 6% total return a year. Or maybe even more. All right, Zebby, sorry, SRF, or what do you say? SRFM, Surf Air Mobility. So dang, this stock is basically at an all-time low today. So I remember this stock, and sadly, I can understand why they're at an all-time low. Whenever you look at a stock, you always got to look at the financials to see if it explains it. So I'll kind of break this down for you. Here's why, sadly, this stock might just continue to go lower. So if you look at the top right, the whole company is worth $120 million. Like, first off, that's a very small company. They're only worth $120 million. Here's the bad part. They're worth $120 million, and they lost $30 million this quarter. and then 28 million the quarter before. Like, just that's $60 million just in the past 2 quarters. That's half of the company. They have lost half of their market cap just in the past 2 quarters, not even including all the other quarters. And like, they lost 100 million that quarter. That's like the whole market cap. So they're losing their entire year. Every year they lose their entire market cap worth of net income and their leverage. Check this out. They have twice as much liabilities as they have assets. So if you ask me, sadly, this is the kind of stock that's, the reason it's at an all-time low is because there's a really high chance of bankruptcy here. And I'm not trying to be bearish, but it really is bad. Terrible balance sheet, losing an insane amount of net income for the market cap with no revenue growth either. Like, I can understand if it was some hyper grower, but no, there is no growth. The revenue's up 2%. So that's just some meme momentum stock that you'd maybe swing trade or something. Definitely wouldn't trust that one with anything meaningful. Hopefully that was helpful there. I just try to give a little warning on that one. Rubrik is such a buy at this point. That's a good cybersecurity stock too. I've actually forgotten about Rubrik. How have they been doing? So I know they've been doing some acquisitions. Is there any news? Barclays raises price target. Okay. $70 price target, and it's a $50 stock today. What I've liked about this stock is how growthy the revenue is, just the top line revenue growth. The revenue's up 48% year over year. After grew 42%. So, and again, they just IPO'd, so there's not too much data before that, but like, this is what you want to see for a growth name, like 48% growth. That's nuts. And the bad news is they're still losing net income, but look at how they're narrowing their losses. They lost 51% less net income than they did the same time last year, which actually was a big beat on expectations. Like, the one thing that really does scare me is how much net income they're losing. But at this rate, like, they were expected to lose 123. They only lost 63. That's literally, like, that's the same as beating on your net income by double. Like, that's so good. And the revenue beat, part of that was from an acquisition. If we go to their cash from investing activities, yeah, last quarter they bought a company for $800 million. So that's part of the reason why the revenue grew 48%, but it was a good acquisition. Anyway, it's a cool cybersecurity name. 69% of the revenue comes from the US. Oh, they're in the ARC portfolio. Cool. Let's see here. They did a, oh, let's do Google. Actually, I haven't looked at Google today. And hey, the big trout. We'll look at PLA. Actually, let's do PLAB first. Because actually, oh, I thought this was Planet Lab. Okay. Because Planet Lab, the largest shareholder of that one is Google. But we'll just do Google after this one. So here's Photronics. They're actually on my watch list. The stock's done great the past couple years. It's at like a new multi-year high, or pretty close to a multi-year high since 2018. So yeah, let's go look at the fundamentals here. So wait, something happened this day. Oh, it was earnings. So they reported earnings and they gapped up like crazy. And that was 2 quarters ago. So let's look at 2 quarters ago, what they do. Maybe they gave good guidance, but yeah, they've been beating on expectations every quarter. You see for the past 3 quarters in a row, they beat. Let's see net income. Yeah, I guess that was probably it. Analysts expected 25 million net income and they did 61 million. And then this quarter, they expected 30, they did 42. So they've been beating on analyst expectations like crazy. And then like, if they're expecting 30 mil next quarter and then the quarter after, like, and they're beating this much, on every metric, they potentially, are more undervalued than they say. Oh, okay. So looks like the growth is finally coming back. So if we kind of zoom out to the revenue, that's the one thing to note. Like, the revenue kind of has been flat for a few years. Let me check out their net income again. So the net the net income is consistent. Like, the good news is, like, there's not a quarter where they're losing money. They haven't lost any money any quarter, like, ever. So they're always making net income. Like, if you average it out, like 50 million net income a quarter. Oh, and great news, they have no debt. So actually, that's a big risk off the table. Wait, so what was the market cap? The whole company, okay, so actually check this out. The whole company's worth $2.2 billion. And I think a lot of their market cap is their net cash. So yeah, they have 640 million of cash and no debt. That's why I added them to my watch list. So here's kind of how I look at this. 30% of what you're paying, 30% of this 2.2 billion market cap is just their cash on hand. So you almost subtract 30% from this forward PE and PE ratio. So they're really trading at like 12 times or 13 times net income because their net cash position being so much of their market cap. Interesting name there. That must be why I put them on watch, is that net cash position. But the sales growth was a little slow. And that stock is technically the same price that it was like in 1997. Let's check out Google, but it is at a multi-year high and they deserve it. So, oh, and then we'll look at Netflix and FN. What's up, agent? Good to see y'all. Oh, and GEMI, Summito, we'll check that one out too. So here's Google right here. This is an ETF in one, with YouTube, Android, Waymo, TPU chips, SpaceX. They own so many things. So yeah, Apple seeks to host next generation Siri on Google Cloud. Pretty cool. Google launches AI model. Um, okay, so let's look at their actual fundamentals, because even though Google has done so great, they're still not even like expensive. If you look on the right, like that's the crazy part. Even though Google's at an all-time high, they're only at a 26 forward PE. So they're only trading at 26 times next year's net income. And for the Mag 7 Google behemoth, I think that's very fair. And this is going to stretch up higher to like a 30 forward PE one day. It's still not an incredible buy. Like if I didn't own Google, I'd maybe buy like the slightest bit of them here if I wanted exposure, but I wouldn't go crazy yet in Google. But they are so quality. And I'm such a happy shareholder. Like I'm up like 80% on my Google shares. It's just a never sell for me at this point. Like no reason to trim them because they're just going to return a good like 7-8% plus a year. So yeah, here's their net income. They literally make like 30 billion of real net income a quarter. And if we zoom out, that's the trend you want to see. Just incredible after-tax net income. And they're investing a lot into the future. So one thing being questioned is how much Google is spending. So they spent 51 billion this quarter, and they're going to be spending like 50 billion for the next 3 quarters in a row. So they're going to be spending more than they're making. So yeah, that's tanking the free cash flow. Actually, the free cash flow is 24 billion. Actually, that was really good compared to Meta. But yeah, anyway, I'm a big fan of Google. It's cheap PE. I wouldn't trim or sell prices today. They have a dividend. They do share buybacks. They do M&A, like they just acquired Wiz. They've like taken over OpenAI, like they're a mini ChatGPT in one, where Google Gemini is like maybe arguably better than them. So yeah, they're no longer being hurt by the AI thesis. So let's check out Netflix. Yeah, let's do Netflix, and then we'll try and get to Raytheon and KSPI. Yeah. And MLM. Yeah, there's like 5 names I want to get to. Thanks for being here. So here's Netflix right here. Yeah, thanks for being here after TikTok already removed my stream from For You page eligibility. So thanks to everyone who's watching from the YouTube stream. I appreciate y'all. If you want to support me, again, best way to support me is subscribe to my YouTube channel. It's called Nathan Roberts, and the link tree in my bio. Just watch the stream from YouTube. But yeah, basically, Netflix is no longer buying Paramount Skydance, Warner Bros. Discovery. So they're trying to buy Warner Bros. Discovery, but they actually accepted the bid from Paramount Skydance, and they actually get like a $3 billion like termination fee. So Netflix just gets a free like $3 billion from the deal because of that. But on that news, the stock literally the second after hours was announced it wasn't bought by Netflix. It literally went up 11%. So that's how we know. And I was saying this, that sort of news, the news about them buying Warner Bros. Discovery, all that fear about it being decreative to their EPS was the reason there was such a drag on the stock, was the reason the PE was being lowered. And now that that's gone, it's just like up good news from here. They're at a 31 forward PE, so a little expensive. Yeah, I wouldn't really buy today. The time to buy, and now when I was recommending is like $80 or sub $80. Yeah, when it was at like a 28 forward PE. So yeah, 31 forward PE. It's an easy business model to understand, a subscription model. A lot of people are subscribed to Netflix, over 300 million people. A lot of people would cancel their Netflix subscription last. If they had to cancel like all their subscriptions, they'd cancel that one last. And their ARPU, their average monthly revenue per user, is $11.69 per month per user, which is pretty cool. And they just print money. This is their real after-tax net income every quarter. Boom, they're saying I'm AFK. Okay. Thank you, TikTok. Okay, we're back. Sorry, it made me fill out a CAPTCHA. But yeah, Netflix easily makes like 2.5 to over 3 billion of net income a quarter. Like that's great net income and free cash flow. If we go to the FCF right here, they're doing 2.5 to 3 billion, or like 2 billion of free cash flow a quarter, which is great. So yeah, no complaints on Netflix's fundamentals. I really liked them. Because before today, they were trying to buy Warner Bros. Discovery for $90 billion, and it was already decreative to the EPS. So yeah, and to buy them, they were actually oh yeah, look at that. Netflix receives $2.8 billion termination fee as Paramount wins the bidding. Okay. Anyway, let's look at this. Yeah, Netflix is great. Congrats if you own them. So let's do KSPI really quickly. KSPI, and then we'll do Raytheon and SCHG and some of these other ones. So it's Caspi.kz. So they are actually headquartered in, is that Kazakhstan currency or where are they headquartered? Yeah, they're headquartered in Kazakhstan, and I'm probably pronouncing that slightly wrong. But anyway, let's see. I'm guessing the revenue. Yeah, so 99% of the revenue comes from there, and then a little bit comes from Ukraine. But yeah, so there must be like some kind of Amazon of what was the country again? Yeah, Kazakhstan. They must be like the Amazon of that country. So they do marketplace. They have a fintech and payment platform. How's the fintech revenue doing? It's up 8% year over year. Marketplace revenue is up 168%. Whoa. So when we combine all the businesses, the revenue grew 49% year over year. So let's zoom out. And this is, again, we've converted the currency to US dollar. So this really is in USD. That looks pretty good. It's at a record this quarter, easily up to 2 billion for the first time ever. And on that, they made 500 million of net income. And this is real. They really are making like 5 to 600 million of after-tax net income a quarter. Insane. So what's the forward multiple here? Only a 6. It's an international stock, but they're only at a 6 forward PE. That's pretty insane. So they're only trading at 6 times next year's net income. Is there any Morningstar coverage on there? No. But that's actually a cool one. Thanks for that. I actually didn't know about them. So Raytheon right here, this, and we'll look at SHE. This is an aerospace and defense play. They sell the ammunition. So every time, have you ever seen those clips of like the US like shooting a bunch of missiles and ammo in the sky, and there's like a money counter. It's like minus 1,000, minus 5,000, minus whatever. Well, this is the company that benefits. They own Raytheon, Collins Aerospace. But yeah, Raytheon sells these like missiles and bullets. They're like, you don't want to own the people fighting the war, you want to own the bullet makers or whatever. So yeah, this one's just been great because it's a nice little aerospace repair place. So they easily make, here's their after-tax net income, like 2 billion in net income a quarter. And of course, the stock is doing so well because of all the war fears. Yeah, look at that. The White House is wanting to meet with Raytheon and defense contractors on accelerating weapon production amid the Iran conflict. Congressional members owning Raytheon shares raise conflict. So, hey, if Congress members are owning Raytheon, maybe you should too. Raytheon to triple the missile production under the Defense Department agreement. So this is one of my more favorite aerospace and defense names right now. But it's unfortunate because just like all the good ones, they're all at all-time highs right now, and they're kind of all really pricey. Like it's so hard to pay its current price, but you still get a good yield. Even if you buy the stock right now at all-time highs, you still get 1.3% of your money back just in a dividend. Yeah, 36 forward PE is a little pricey, but they're tripling their missile production. Isn't that crazy? First time coming across your channel, thanks for the analysis. Hey, thanks again. I really appreciate you. Yeah, if you want the follow button, I try and stream every day. So SCHG, let's check this one out. So strategic large cap. Okay, so yeah, this is kind of like a QQQ alternative. They have a really low expense ratio. Yeah, a 0.04% expense ratio. So it's kind of cheap, way cheaper than the QQQ that's at a 0.2% expense ratio fee. But yeah, so it's pretty similar. Its top holding is just like the Qs. It's NVIDIA, the market cap weighted. NVIDIA, Apple, Microsoft, Amazon, Meta, Google, Tesla, Broadcom, Google, Eli Lilly. So here's the sector kind of breakdown. Tech is 44%, communications, healthcare. So US large cap growth ETF. It's a good one. It'll probably just keep up with the S&P 500, maybe do a little better. Big Papa's Pizza said, what stock do you recommend buying today? That's a good question. I haven't bought anything today. I was buying stuff yesterday and the day before when there was, good opportunities. I'm really trying to think there's still some stocks are at a decent prices. Like Microsoft is still a good buy. Amazon's now kind of out of that territory after this little 4% candlestick day. So that's why I actually think Microsoft's a little better of a buy than Amazon, because I've been loading the boat on Amazon. That's been one of my favorite stocks to buy. I've been talking about that one a bunch. I've been putting in a bunch of buy orders down here, about like $1,400 of them. Bought AppLovin. I think Uber's still a really good deal. I think Uber's at like a 20 forward PE. They just bought, oh my goodness. Actually, I need to buy Uber because they just bought an app called Spot Hero, and I love Spot Hero. Oh, there it is. Look, Uber to acquire parking reservation app Spot Hero for an undisclosed sum. So I'm just... Uber CEO states majority of trips could be autonomous within 20 years. So that's kind of the bear case here. With Uber, what's going to happen? Like, is it going to be such a commodity? Like, will robo-taxis and Waymos just like lower the cost for them? But I really think it's the values in the platform where all the users are. So if we go to Uber right here, this is actually a really good metric. This is not just their monthly users, but their monthly active consumers. So the people actually using and consuming their product service is 202 million a month, up from 171. The real winner is the platform with the users where you go to book the autonomous driving car. So if we go to Uber, the profits are at a record, and I think the valuation is still cheap. Like if you go to the right, 22 forward PE, and they just acquired Spot Hero. I'm gonna re-add them to the top of my watches because I'm like I keep forgetting to not buy. I forget to buy Uber, so I need to buy them. So let's do MLM and then we'll do FN. Oh yeah, I meant to get to FN too. Is that MLM? So this is Martin Marietta Materials. So the stock has done phenomenal. Is this that like building material? Yeah. So actually, my cousin, he literally works for this company and he makes literally like 200 grand a year solely. He's like the best mechanic ever, just repairing their trucks. Like that's all he does for a living. Like just for this company, he just repairs their trucks. It's insane. But let's see. So aggregates. So the stock's at an all-time high. It's because of the construction spend. You know, we're bringing manufacturing back to the U.S. with all the tariffs and stuff. So more stuff is being built, new plants, new whatever. That's just to the beneficiary of all these like construction companies, like data centers too. So right now their earnings aren't growing too much. I mean, the revenue's up 8% year over year. They're actually making good net income. Checked it out, like a couple $100 million in net income a quarter. But the forward PE, I probably wouldn't buy, or I wouldn't really buy it at this price at all-time highs. You know, at a 32 forward PE, you still get a 0.5% dividend yield. Really safe payout ratio. So yeah, I mean, I wouldn't buy it today, but I can see why they're doing so. They kind of, building kind of infrastructure play. So let's do Fabrinet right here. This is actually another cool, what's up, long time no see. I wish you had a username so I could, call you something, but he says, what's your favorite retail stock? Like retail is in like a retail store, or just like retail investors? Like those are two. I guess I could just answer both. I mean, that's a good one. Retail store. Well, I don't love like I wouldn't buy like a Macy's or I don't know. I mean, Amazon Whole Foods is good. I have some extras to them, but I have a Sprouts Farmers Market. I mean, I guess that's kind of, it's really a grocery. I don't really know. Fabrinet stock though. Let's look at this one. This one's another, they're like an optical, like, I don't even know, like sensors and fiber optics company, or like they do a lot of work for telecom, like these fiber optics, and it's actually growing crazy. It's up 66% year over year. That's their main business that grew 66. Then their second biggest business is Datacom, which is down 7%. Oh, here's the one, Data Center Interconnect. Let's check out how this one's growing, and that grew 42% year over year. It literally went from 71 to 142 mil. Last quarter was up 92%, so I want to see more growth on that. Automotive's up 12. So they're nicely diversified. Like they have a lot of different streams of revenue, like HPC, so the cloud. Whoa, they're in the HPC industry, so that went from 15 to 85 mil. That's literally a 7x. Wow. So if we go to the revenue, look at that. If we zoom out, I mean, that's what you want to see. I mean, it just hits a new record every year, every quarter. Same with the net income too. Look at that. That's what you want to see. When the revenue hits a record, the profits are hitting a record as well. So yeah, they're doing great. So really good balance sheet too. Investing in the future. Yeah, free cash flow is good. So the expectations are good too. So if we go to the net income, they're expecting it to go from 77 million to 127 million year over year. So yeah, you can watch the HPC and data center interconnect growth the past couple of years. So for the next couple of years, if we look at their current PE, they're expensive at a 55, but you look at the forward PE, they're only at a 39, which is still expensive. Like I probably wouldn't buy them at all-time highs. Like I'd maybe rather buy like a Amphenol or something, which I do own. That's right here. And I've been kind of buying this stock a little bit. But yeah, actually, I really like them. Hey, Caden said, love your channel. Hey, I appreciate that, man. Yo, I think we finally hit the bottom. Also, good to see Dave had nice earnings. Yo, yeah, I totally agree, said Jerry. Yeah, Dave did great. And yeah, I really hope we did set in a bottom. So, did you check Nike yet? I'll check Nike for you. I guess this is kind of like a retail store because they own a bunch of actual Nike stores. But I'm just not a fan of the commodity apparel and shoe industry. And I actually used to be. I used to own Nike, but this is one of the stocks I actually sold out of back in 2025, March, really early 2025. I actually completely sold out of Nike. I sold it at $78, and well, it's at 58 today. They just have had disappointing numbers. And like, here's the thing, even on this dip, even though they're on this crazy dip, like they're the same prices they were back in 2015. They're the same prices they were a decade ago. Nike isn't cheap. Like in terms of net income multiples, like even on next year's net income, Nike's at a 31 forward PE. You know, I'd rather buy Amazon. If you didn't know, and I was just researching this, Amazon almost has a higher market share than Nike in terms of apparel and footwear sales. Amazon has like a 25% market share for apparel and footwear, like legging, I can't believe how big the Amazon apparel business was. But anyway, yeah, so they own Nike and they own Converse, which is only 2% of the revenue. But yeah, Nike, let's see how the revenue is growing. So here's the tough part. You know, if we go to the revenue, the lifeblood of the company, the sales, it's not growing, or it's not growing faster than inflation. The revenue is only up 0.5. Last quarter is up 1%. You know, that's after a bunch of negative numbers. So it's just like they lost the growth. They're losing, you know, technically negative growth with inflation. And the margins are the worst part. So as we can see, the revenue grew year over year. The revenue's up 0.5, but the net income is actually down by 32. And that's not some one-time adjustment either. The operating profit fell 27%. So that's a margin collapse issue. If we go to their gross margins are down 7%. Net margins are down by 30% year over year. So the sad truth is I would not buy Nike because there's a growth issue, there's a margin collapse issue, there's a tariff issue, growth issue, industry issue, a valuation issue. It's just a low margin commodity, where it's getting, because of how competitive, like they have to lower their margins. Like it's just tough. And I feel bad saying this because I used to own Nike. I have a Nike shoe collection. I love Nike. But wouldn't buy the stock, sadly. Okay, let's look at a few more here. Yeah, so you think Cloudflare is a better play? Cloudflare is ridiculously expensive, so sadly, like Palantir type expensive, so I don't like Cloudflare. I love Cloudflare, but I don't love the valuation. One of the highest valuations out there, not even like a reasonable valuation, like a 7-peg, 6-peg. So here's Ferguson. So I forget, is this like an infrastructure? Is this like an education company? Let me just double check. Industrial distribution, repair, maintenance, improvement. Well, let me go to their website right here. Ferguson, value added distributor, essential water and air solutions. Guess here's their webs. Plumbing, fire fabrication, supply. All right, well, let's look at their numbers because that's what matters. So the forward PE is good, at only a 23 forward PE. So they're only trading at 23 times next year's net income. Let's see revenue growth. So the revenue has kind of slowed down. Like if we look at the growth rates, like it's mid to low single digits. Like it's up 5%. Last quarter was down 5, then 4, 2, 0.8, 2, 2, 1. So that's the bad news. Yeah, if we zoom out to the revenue, it's kind of where it was in 2023. So the revenue's been flat for a couple years. What about the net income though? So, well, let me just look at it like this. So actually, yeah, the revenue is up by 5, but the profits grew by 15. So the margins actually did grow a bit year over year. Yeah, net margin grew 15% year over year. They're still printing money. If we average it out, they're easily making like 400 plus million of after-tax net income a quarter, which is good. Again, it's kind of where it was in 2022, but it's still great. 23 forward PE. That's probably reasonable because the growth is a little slow, but overall, no real complaints. I mean, a $50 billion company, I mean, that makes sense for the net income they're making, and you get a 1.4% dividend yield, 23 forward PE. We just want to see the growth kind of stabilize. Is Microsoft a buy today? I think so. Oh yeah. Hey, what's up, Lulu? Looking at dipping into UNH and NOC. Ooh, so I don't love UNH just because of the whole government shenanigans. Like, it's just so government. Like, it's just like all the revenue is just like dependent on if the government allows them to raise prices. And this is actually a big margin issue. Like, UNH, I can see why is doing so bad. Like, the revenue is great. We're a customer. We use OptumRx. But this is a margin issue. So if we go to the revenue, check this out. The revenue is up 12% year over year. They did $113 billion in revenue. Here's the bad news. On this revenue, look at the net income. It was only $218 million, and that's real. Like, this wasn't some one-time adjustment. Like, they didn't like have some one-time adjustment. Like, the real operating profit literally fell. Net income is down 96%, and profits are down by 95%. That was real, and it was a huge miss this quarter. Like, it's just tough. Like, they missed on revenue, but it was a big miss on net income this quarter specifically. So this is a big margin issue. Here's their net margin. Yeah, the net margin was only a 0.19, and this is the rough part. UNH pays a 3% dividend. That's a high yield, and that cost a lot of money. So check this out. Let's actually go see exactly how much their dividend costs. So for the fun of it, their dividend cost every quarter $2 billion. So no matter what, they're paying $2 billion just to the dividend a quarter. Well, it's rough when you didn't make any net income this quarter. What are the projections? I think the projections are still fine. Well, actually, it's rough because we don't know if they're going to miss like crazy again. So I guess actually the expectations are good. So they're expected to make $5.9 billion, which will easily cover the dividend in the next quarter, $4 billion. So it's honestly, the expectations are good. I mean, the revenue is supposed to fall, but I mean, it's really not the end of the world if the analysts are right. If the analysts are right, they're at a 17 forward PE and it's not too shabby. But I'm just kind of staying away from that industry right now. But the NOC though, I really like NOC. This is Northrop Grumman. This is a aerospace kind of in a defense play. That's why they're at an all-time high right now, kind of like Raytheon and a lot of these other names are. Let's see. Northrop Grumman stealth bombers deployed in U.S. Israeli military strikes on Iran. They're actually deployed. Wow. Northrop has approximately 10% of sales tied to missile systems, representing among the lowest exposure in the defense sector. Morgan Stanley analyst set a $765 price target. It's a 20% discount. So yeah, they actually have one of the cheaper multiples. If we look on the right, like even though the stock's at an all-time high, they're only trading at 26 times next year's net income, which is like not that expensive. So yeah, they do aeronautics systems, mission systems, space, defense. So I like how widely diversified that they are. 85% of the revenue comes from the US. They've been beating on expectations the past couple quarters in a row. Look at that. They expected 990. They did 1.4 bill. I mean, that's great news. So yeah, then you get a nice yield as well. 26 forward PE, 1.2% dividend yield. Yeah, it's one of the like cheaper aerospace and defense plays. And they're still like quality. What stocks would you look at that aren't tech stocks? Yeah, if you have any, let me know. You know, I own a lot of non-tech stocks, like a Baltimore, like a McDonald's, a Carlisle, which is repair roofs, a United Rentals, an HCA Healthcare. This is my favorite healthcare play. Instead of a UNH, I actually own HCA Healthcare, the largest non-governmental hospital group. I own like some other boring names too. Actually, I own like a Sprouts Farmers Market, a Progressive, an Iron Mountain REIT, a Disney, Calmaine, Chicken Egg, AbbVie. Oh, yeah, AbbVie's doing great today. Whoa. You know, this is one with the high yield and good stock price appreciation. I've always been shilling AbbVie because I love this company. It's one of the few that have like a good yield and gives you good stock price appreciation. Same with like Southern Company. These I went in depth in these like Southern Company. You get over 3% dividend yield and you should get like 3% plus 3 to 4% stock price appreciation on top of that every year. Someone said, what metals are you interested in? You know, not really any commodity metals. I mean, gold's kind of decent. I mean, the best copper play is FCX right here. Yeah, I don't really have any like pure metal, like metal mining companies, like a MP Materials. I don't really have any of those kind of stocks like a USAR. But I know if we look at like just a precious metal gold, ticker symbol IAU is just a commodity of gold in an ETF. It's done phenomenal. You know, if we kind of zoom out, you know, gold has just done great. So congrats. If you got any gold chains, gold jewelry or something, maybe go hit up the pawn shop because it's doubled in a year. So it's pretty crazy. Sagittarius said, can we look at SANM? They fell last month. We're thinking of buying the dip. I think it was it. Dude, this company, wow. Okay, so I don't remember this, but I guess I like bought them like 2023 or I don't remember. This was like actually on Moomoo, the first ever stock I actually bought ever was SANM. And like I don't know, I just made my Moomoo account. I didn't even have like a plan with my Moomoo account. I was just like, let's just buy something. So this is a semiconductor play. Dang, if I only kept those shares, I'd be up like I'd be up 300%. Or no, 200%. But look at this. Even though they're at this kind of expensive, or well, they're pretty close to an all-time, well, not really, but they've done great the past year. Even at this valuation, they're pretty cheap. They're only at a 25 forward PE, so they only trade at 25 times next year's net income. What is this right here? Reportable segment, integrated manufacturing solutions. Check out how that bumped up this quarter, grew 71% year over year. So that's great news there. Market. So this is like an international infrastructure play. So look at this. Their largest country is actually Mexico. Mexico is 40% of all the revenue. Asia, APAC is 25%. US is 17%. EU is 10%. So I like how internationally diversified that they are. Yeah, here's their net income. They're making like 70, 50 mil in net income. Did they do an acquisition? So that's probably why the revenue and net income fell. So one of the reasons why the revenue bumped up so much is it looks like they bought a company this quarter for $1.4 billion. So I would look into that acquisition. What did they just buy for $1.5 billion? That is actually pretty interesting. And that's probably why their net income slightly fell from like acquisition related fees and stuff. So anyway, it's an interesting name here. So electronic components. Maybe we can click on their website right here. I think, I'm not going to remember if it was this company, but it was a company sort of like this that does like electrical components that Meta just took like a 2% stake in. But I cannot remember that company for the life of me right now. Oh, well. Okay. Hey, I didn't realize Coke and KO were different. Coke has no ridiculous. Yeah. Hey, what's up, Market Miker? I like that name there. This is actually, the Coca-Cola bottler. This is Coca-Cola Consolidated, a completely different company than the main one. Yeah, they're only worth 13 billion in the top right. They're only worth 13 billion when the main Coca-Cola parent company, which sells the syrups and stuff, when they just bottled them, they were worth like 200 billion. So yeah, they're way smaller, but they've done great. Very happy shareholder of Coca-Cola Consolidated. It's a bit of a different stock than like any other company. The CEO and their family owns 85% of all the voting rights for the shares. There is no earnings calls. So like they just report their earnings. They don't like talk to investors because they don't have any influence. So anyway, I just like this company and their values. And what they just did was they just bought back 22% of all their shares. That's the reason they're doing so well. At $127 a share, they bought back 22% of the entire company. And they've just been up ever since. So I'm not trimming or selling any shares of Coca-Cola Consolidated. That's a nice, like owning a McDonald's, owning a Coca-Cola, those are great. Like a HA Healthcare, it's great when like software is doing really bad. Usually these boring like McDonald's, Coca-Cola defense names do good when all of tech is doing bad, and you get the nice dividends. Yeah, look at that. From McDonald's, we're getting a $33 dividend. And so this is in my taxable account. You want to know what's crazy? Dividends are taxed at long-term capital gains or, qualified dividends. So since this isn't from a REIT or a BDC, every stock, except for Iron Mountain, every stock I own pays qualified dividends like McDonald's. What I was saying was dividends are taxed at long-term capital gains, and long-term capital gains tax is 0% if you make under 48K, and I make under 48K a year. So whenever I receive a dividend, like I'm about to get this $33 from McDonald's, it's completely tax-free. No matter the state you live in, it's completely tax-free. So that's what's kind of cool. Okay, that's why I also, I don't mind having a taxable account. Like I have a Roth IRA. I love the tax benefits of the Roth IRA, but I'm always a big fan of just having a normal taxable account because it's still like, also, speaking of this, y'all won't believe me, but I promise it's true. Long-term capital gains, if you own a stock for over 1 year and then you sell it, so like, or Google, I've owned this for well over a year. If I sell all my shares of Google right now for $2,600 a profit, 86% gain, it's completely tax-free, even in my taxable account. Again, because it's taxed at long-term capital gains and I make under 48K a year. It's completely tax-free. Isn't that insane? And how do I know? Because I just did my taxes. Okay. And I did it last year. Well, okay. What stocks do you have in your Roth IRA? Yeah, if you have any questions for me, let me know. I'm not going to be streaming for too much longer, but I appreciate everyone that's here. I'm trying to stream every day. If you want to hit the follow button, I sell nothing. I have no course, book, WhatsApp. I'm just trying to give my opinion. But yeah, this is every stock in my Roth IRA. It's kind of, I'm working on my Roth IRA. It's getting there. The more boring it is, the better. Yeah, I agree. Well, most of the cases, yeah, like a boring like HVAC comfort systems play. That one's been phenomenally well. Hey, what up, Shark? Good to see the green today. Nice recovery. I agree, man. Yesterday was great. Watching healthcare companies like THC and CH. Yeah, Cardinal Health. This is a very cool one that's at a crazy all-time high. Hey, we'll look at SE and Weeble before I go to. Yeah, I got you. And we'll look at Futu. Yes, sir. I do own Futu. I own a lot of them. I just bought a little more of them. But yeah, Cardinal Health right here. They do. It's like medical, like logistics, like I don't even know how to, this is what they call it, pharmaceutical and specialty solutions. Like they do this supply chain, like pharmaceutical solutions. Like I don't even know how to call it. It's very low margin, but they have a net margin. So look at their net, or I'll just kind of expect this from the revenue. The sales is 65 billion. On the 65 billion, they netted only 470 million, which means their net margin is a 0.7. But that's all they need. All they need is a 0.7% margin, and they make 400 to 500 million in net income a quarter. Now imagine if this company was able to run it like on an average a 1% net margin. That would be making them over like $1 billion, well, close to $1 billion a quarter. But even making 500 million in net income a quarter, the valuation is cheap on the ride. The forward PE is a 25. Even at all-time highs, the forward PE is a 25. So that's why I actually wouldn't be shocked to see this one just continue to climb higher, because that forward PE could still stretch up a little bit higher to like a 28 or a 29 maybe before it maxes out. And you get a nice dividend, a 1% of your money back just in a qualified dividend a year. So yeah, if I was a shareholder, I really wouldn't be selling that one or trimming. I can see why they're doing so well. What's up, Terrence? Good to see you. Yeah, let's do SC. What's up, Mendo? So this is a dang, they've been not doing too well. They tanked yesterday. Did they report earnings? Let's check. Q4. So yeah, okay, here's their earnings report. So it hasn't loaded in down here because this says Q3, but this is the Q4 data. So we do see lines. So they beat on revenue. They expected 6.4, they did 6.8. But they slightly beat on net income. They beat by like 2 million on net income. The EPS projections are great. It's going to go from 65 to 86. Revenue's good. I wonder why they freaked out, because they still made like 390 million net income. That's in line with this like triple digit growth. Yeah, so it went from 230 to 390. Yeah, that's still a great growth rate. So maybe, but their actual numbers doesn't always give all the context. Maybe the CEO came out and said, okay, we're giving bad guidance for this next year or something. I don't know. C discloses Shopee served 400 million active buyers and 20 million sellers in 2025. C's Money financial platform adds over 20 million first-time borrowers in 2025. So yeah, they have like this commerce platform, like a market e-commerce platform, and a fintech, digital financial services business. So so this is the neutral news. C guides 2026 GMV growth to 25% and adjusted EBITDA to remain at 2025 levels. So they're not, so the business is growing 25%, but the actual profits or the adjusted EBITDA is staying flat. So maybe it's a margin issue. I'd look more into that because it's still a good company. Like this is, I should show you where the revenue comes from. So this is, all the revenue literally comes from like Southeast Asia and like Latin America. So this isn't like, notice the US, Canada isn't on here. It's like a Southeast Asia, like e-commerce, Amazon digital platform kind of company. Yeah, here's their quarterly active users and their GMV number we were talking about. And look at the forward PE. So that's why it's attractive, only at a 23 forward PE. So, apparently it got manipulated. It dropped 23% on earnings. Well, it's good to see it have a little bit of recovery. Let's check the 5-day chart here. So yeah, dang, it went from 105 to 79, but it's recovered back to 90 a little. But yeah, still rough. Overall, the earnings will look, I don't think it, without doing more research, like I don't think it should have fallen. A 23% fall was not justified there. Did not expect that. You hold Futu, right? Keeping an eye on them. They like to fall. Yeah, so let me pull up Futu. I love this. I'm only up 10% on this stock right here. They've been falling just like Robinhood and all these other brokerages apps. So if you're wondering what is Futu, That's actually this app I'm on right now, publicly traded. If you look at the top of my screen, the app is called Moomoo, and then the stock right here, the ticker symbol FUTU, is called Moomoo. So it's literally this app I'm on right now, publicly traded. By the way, if you want to get this app, I have an affiliate link. It's in the link tree in my bio, or the link in the description. Very first link there, very first link in the link tree in my bio. If you go and like deposit $100, they'll both get like a free stock, I think. But my favorite brokerage. But anyway, this app right here is publicly traded. Let's go see if the brokerage is safe, if we're going to keep our assets on there. And this is their after-tax net income. You know, they literally made $413 million in net income, and on $828 million revenue. That's the crazy part. So the revenue is $820 million, and they netted on that 413, which means their net margin is over 50%. These brokerages print money, and a lot of that's from their interest income. 50% of the revenue comes from interest income. I'll kind of explain that. So if you look in the middle of my, if you look in the middle of my screen right here, if I keep my cash, like I have $6 of cash if I had more, but I get a 3.35% APY on my idle cash. They give this to you for free. You have to pay, you don't have to pay anything. There is no way to pay money on this app. It's a completely free app. If you deposit your cash, you get a 3.35% APY. You get a 3.35% APY. They keep your money in like a 4%. They earn 4% on it, and then they just give you 3.35%. So they just keep the difference, and you don't mind because it's still free. Like it just earns money while like it's just your idle cash. Like you don't mind it either. So same with like Robinhood and Weeble, but the forward PE is only in a 12. It's like literally it's cheaper than Robinhood, cheaper than Weeble stock with the cheaper valuation. And more growth, literally more growth to the margins, to the sales, the revenue. Let me show you that again. The revenue is up 86 after grew 30, and the net income's up 143. It's up triple digits for the past 4 quarters in a row. Another big part of that's from their crypto. They just added in crypto to the app, and that business is growing triple digits for the past 4 quarters in a row. Their brokerage commissions are up 90% year over year. Every metric is just so growthy. Analysts have the expectations up and to the right. This quarter, they expected 375. They did 414. Pretty insane. So yeah, I do own FUTU. I might be biased, but I own them for a reason. Dell stock. Let's do Dell real quick. This is kind of like a value play. Look at that. I actually didn't know they gapped up like crazy 3 days ago. Was there any news for them to gap up? Because I don't think they reported earnings. Let's go look if there's any news. Dell reports record Q4 earnings, projects AI server revenue to double for full year 2027. Dell announces 20% dividend increase and 10 billion share buyback. Dang, because the whole company's worth 97 billion. So 10 billion buyback is over 10% of all the shares that exist. Dell Technologies $43 billion 2027 backlog, predominantly from Grace Blackwell orders. Vera Rubin chips expected in second half. So yeah, they are kind of do what Supermicro does. They install your servers and chips for you. So if we go to their infrastructure solutions, this has been the real boomer. And I think they just reported earnings a couple days ago, but they haven't loaded in. Well, let's see. Q4, Q3. Okay, so they have loaded in up here. So here's what they reported. They expected 31 bill. They did 33. They expected 2 billion. They did 2.25 billion in net income. So again, it hasn't loaded in down here because the earnings just came out, but I can see why they gapped up on earnings. It really was a good beat. They beat on revenue, they beat on net income, they beat on EBITDA, they beat on EPS. It was a great beat. And they rose the dividend. So you have a 1.4% dividend. That just rose it by 20%. And they're buying back another 10% of all the shares. Like they can easily afford that. So they're making 1.4 billion in net income a quarter. And if we go to their dividend cost, the dividend only costs 350 million. And how'd the cost of the dividend go down from 390? Again, it's because of the share buybacks. They're already doing $1 billion to $2 billion of share buybacks a quarter. So they're just very shareholder friendly, a way better buy, I think, than a Supermicro. But it's kind of value play. I wouldn't have it as a crazy big size position. It's still like a teen multiple, I think Dell has. Because it's kind of 13 forward PE, but that's really cheap. That's why I call it like a value stock. Let's see right here. T-Row. Oh yeah, T-Row. And then I'll try and get to DHT, and then we'll kind of call it a stream here. Hey, Sheet Man. Dude, thanks for that gift there. I appreciate you. If you have a stock you may look at, let me know. So here's T-Row price group. This is like a dividend play. So if we go to the dividend right here, this is what's crazy. You get a 5.5% dividend, And the payout ratio is only at 55, and I'll prove it to you. So if we go to their net income right here, they're easily making, if you average it out, let's call it over, yeah, it's well over that. It's over 520 million of net income a quarter. So they're making 520 million net income a quarter. Oh, and another big cherry on top is they have no debt at all. So completely debt-free company. They don't owe anyone any money. They're also earning interest on their cash every quarter. But the dividend only cost 284 million. Again, they make 520 mil, and the dividend only costs 284, and it's a 5.5% dividend with no debt. So that's what's kind of cool. Yeah, so you really have a 5.5% yield at a 55% payout ratio. The bad news is you probably just won't outperform total return the S&P. Like technically, this stock is the same price that it was in 2017. So yeah, you get like the 6% dividend, but on average, it's not really looking like you get much stock price appreciation. But that could change, because they are really cheap. Yeah, a 10 PE. They're trading at 10 times net income. I don't know if they're just being out innovated right now by other asset managers, maybe like by like a Robinhood or something. But yeah. Okay. Okay, Weeble again, and someone said, Dave was up 12%. Yeah, dude, Dave, they just reported earnings. They were really good. I think Weeble is a good buy. Hey, we'll be quick about Weeble. So honestly, it's not a good buy to buy meaningfully, but it's a decent buy if you want to just buy like a little bit amount of them. And that's what I really can't stress enough how like you cannot have this as a meaningful size position yet or right now. Like I only own $550 of it. It's one of my smaller positions. But I really do like Weeble, and I'm way more bullish on Weeble than the analysts are because I am a Weeble user. I've been using Weeble for many, many years, since 2021. And if you look in the top right, they just added in prediction markets and crypto to the app. It was right after they IPO. They literally added this stuff in, and they were promoting this crazy on the Super Bowl and stuff. So I think this is going to add them, and these other ones like cash management, advisory. I think this is going to bring them in a lot newer streams of revenue. Plus they have a subscription that you can pay for, which I don't pay for, but it's just like they've basically copied Robinhood's successful business model. That's what's making Robinhood a lot of money right now. Every time you do a prediction market contract down here, they keep 2% of every contract, or they 2% commission. Whenever you buy a stock, they get a 0.1% commission. Crypto is like a 1%, but it's this prediction market stuff that's 20x more valuable than stocks. So that's why they're really pushing hard the prediction market stuff, because it makes Robinhood and Weeble a lot of money. So yeah, that's kind of my thesis behind Weeble. I'm just more bullish than the analysts are. Again, they're still expensive, even at an all-time low. Like the forward PE is like a 45. And notice this quarter, they just IPO. They beat like crazy. Analysts expected 137. They did 156. They expected 9. They did 36 million. And I think they're going to continue to do like 30, 40 million. Oh yeah, we were doing the math earlier. They're trading on my numbers at a 26 forward PE on my generous numbers. So yeah. All right. Give me a portfolio. Let me do Dave, and then we'll do a portfolio update, and then I'll get out of here. I appreciate everyone that's here. If you want to hit the follow button, hit the like button. I appreciate that. We try and stream every day. I saw nothing. So here's Dave. This is one of my favorite growth companies. I do own them, but what I like about them is how cheap they are. If we go to the valuation, where is this right here? So on the right, the forward PE is only a 15, and I actually think it's much cheaper than a 15 because they get this forward PE using these orange lines right here, using this 40 million net income, 42 million the quarter after. Historically, they always beat by a big chunk on their net income. Like they expected 46 or 47, they did 66, and last quarter was a big beat as well. Honestly, you should look at the EBIT because it kind of removes the adjustments, or really this number right here. Like this is what I love about Dave. It was a tough buy a couple years ago. They were losing money every quarter. Well, now they are printing money every quarter. In the revenue too, the revenue just hits a new record every year, every quarter. Great margins. So I might be biased because I'm a shareholder, but and great balance sheet too. No net debt. They're deleveraging. The liabilities used to be 42% of the assets. Now it's only 32. And the free cash flow is honestly the best part. They have like a 10% free cash flow yield, or at least they did. The free cash flow is even higher. They're doing this growth rate like triple digits for the past 5, 6, 7, 8, 9, 10. But the past 10 quarters in a row, the free cash flow has grown triple digits. Like I just love the growth here. And the analysts are expecting them to just continue to grow more. So that's why I think a 15 forward PE is very like justified. And I even think on my math, the forward PE is even cheaper than that. And the crazy part is my yield on cost is really good because I'm up 170% on Dave. I regret, well, actually, I sold it really high. I sold at 172 and it's still at wait, 172 or no, 272. I sold it 272 and it's 209 today. Dave is like that forward PE is just so cheap, and I think it's only going to go lower. So yeah, let me give you a quick portfolio update. So this is my Weeble account, all time. You know, we haven't done too great. We're only up 9% all time in here. We're up 1.45% of the day. A lot of these tech names have been doing great. Like AMD's up 5. AppLovin is up almost 10% on the day. This is one I've been talking about a whole bunch. I made a bunch of shorts and videos about them. Zoom, Robinhood is up 8 with all the crypto news because Bitcoin's on a tear today. What's down in here is Sprouts Farm. Some of our defense names like a Clear Secure, Progressive, Sprouts Farmers, they're down on the day. But then we have our Moomoo portfolio known as our buy never sell account, where once you buy a stock in here, I just never sell it. And these are all the stocks that we own in here. Wow, every stock is now green on the day. So today is a great day for stocks. We're up 2.28%, especially compared to yesterday and the days kind of before today. Stocks have been not doing too well. And then our Robinhood main account right here, our dividend-only portfolio is up 0.26% on the day. These are all the stocks that we own in here. And here's my total equity in every stock. Our largest holding is at the top, and then our smallest are at the bottom. I want to buy more Meta just because it's such a small position compared to all my other ones. I at least want to get it's like a $4,000 position. And then our Roth IRA is down 3% year to date. These are all the stocks we've got in here. And wow, every stock in here is also green on the day. So there's just a lot of green across the board. I guess some of our stocks are down here, like McDonald's, Google are slightly down, but the market closes in 30 minutes. Good luck out there. Remember, don't panic, sell. Hope you have a great rest of your day. Thanks again. Make sure you hit the follow button if you want to come back. We're going to be streaming tomorrow as well. So see ya. And if you're still on the YouTube stream, make sure you hit the like button if you haven't already. It does really help me out. And always, I'd appreciate if you want to check out my most recent YouTube video. I just did a really nice YouTube video. How have you made this much wealth at such a young age? Well, mainly from my YouTube channel, NVO Crypto. My main YouTube channel is called Rust Moments. I made over $100,000 on that channel. And fortunately, that channel doesn't make I don't post to it anymore, but that's where I got a lot of my original money from that. Actually, I can pull it up really quickly, or I can hide the screen. Just for the end of the stream fun, I'll show you it really quickly. Ooh, I got to go incognito mode, though, before I, dox myself. Let's see. Rust. Actually, no, I could go to I'll stay on my main account. Who cares? Okay. Videos. Popular. Okay. So here is my old YouTube channel. I've made every single one of these videos. I made every thumbnail. This was my whole life. Like, it was a full-time job for me. I've made hundreds, and I used to get like heck of views on these. See, notice these were all 4 or 5 years ago. I've made every single one of these thumbnails, every one of these videos. But yeah, that's basically where I got all my original money. So anyway, for the person that asked, it's the end of the stream. Why not share it? So yeah, anyway. I wonder if I could pull up the revenue for some of these. If it would show well, I guess not. Oh, dang, my whole thing just crashed on me. Okay, well, I guess I really can't show it now. Dang, the whole application crashed. Well, I kind of want to show it now. Hold on. And then I'll get out of here because this is stupid. Okay. Here's how much YouTube videos make if you're curious. And the stock channel doesn't do as good, but yeah, so here's kind of some of the videos, like this one right here. 1 hour of the best Rust moments. It got 420k views and it made 1.4k just from that one video. And then like this one right here, my second one, like all these right here have made, like that one made $901, and then this one made 1.1k, and then this one made, well, this one has ad issues, but that one only made 500. But anyway, that's kind of my channel. Yo, I've seen this. Hey, wait, you've seen my old Rust channel? Well, hey.